I'll be sharing two exciting seminars that I'm passionate about. First is breaking the paycheck to paycheck cycle for homeownership. And the other is a small business seminar on access to capital for those looking to start a business or grow their existing businesses. So regardless of who you are and what your financial goals are, the information shared here today is going to benefit you, and you'll have takeaways that you'll be able to apply to your lives immediately. So we can go ahead and start the first presentation on budgeting. We'll get the slides up. All right, fantastic. So this seminar on budgeting, this is a seminar on budgeting for and saving for homeownership. And if you're already a homeowner, whatever it is you're saving for, the tools shared here will support you in improving your finances and achieving your financial goals. So that's what the first seminar is going to be on, breaking that paycheck to paycheck cycle so that you can achieve your goals. We'll move to the next slide. All right, so preparing and saving. So we'll explore budgeting for homeownership, and here are some key concepts to keep in mind. And this will go hand in hand with what I'm sure the real estate professional will discuss with later as well. How much can you afford? How much can you pay upfront for a down payment? That's a big one. How much of your income do you spend each month? And how can you cut expenses and increase saving for a home or saving for whatever your goal is? So we'll take a look at those in this presentation. Next slide. All right, so the objectives of this seminar is to give you money management strategies to identify and define your monthly budget items, both fixed and variable. You know, what things do you have that are fixed, that don't change, and what's variable? What can you make some adjustments on? Creating a budget. So you know, it's really important that you create a budget, design a budget to help manage your spending and work to eliminate debt. So that's a key part of making sure that you personally take charge and take control of your finances. And then also finally, budget action planning, learning how to make smart spending decisions and plan for what your income, where it's going to go and what it's going to look like so that long term or short term you can achieve your financial goals. We'll move to the next slide. All right, so in breaking that cycle trap, you know, why some people may not succeed financially, you know, it's a three-part thing. We're looking at ineffective money management skills, and some people just don't have the tools in order to do that, and that's what this is all about. Being caught in the cycle of living paycheck to paycheck, and then poor spending decisions. So all of these kind of tie into what has some people feel stuck in their finances. And we're going to go over some things in order to give you these money management skills that you need in order to succeed. We can move to the next slide. All right, so we want to, for money management strategies, there are a few things we want to look at. You know, one, we want to know where our money is going before the paycheck comes. So making sure that we have a budget plan. Know how much you make, know how much is coming in, and being able to control where it goes. So having that budget plan, looking at short-term needs and plan for long-term needs and wants. So understanding not only are you living for today, but you're living for tomorrow. You're thinking about what are some of the things you want to achieve in the short term as well as in the long term. Creating an emergency fund for those hiccup times. So we all have things that happen in life that come up last minute or emergencies, but if we're not planning for them, then you know, we're not in the best financial position possible. So that's another thing that we want to incorporate as a strategy as we save. And then finally, investing in your future. Thinking about retirement, not only what we want for you know, this year, next year, 5 years from now, but thinking about the life we want to live in our retirement, what we want our lives to look like, and what can we do today in order to help us to get there. So a very key part as well. We'll move on to the next slide. All right, so creating a budget, or we're talking about budget planning and how you can actually take control of your finances. You want to start with creating a budget in order to track your spending. So this is a sample tracking sheet, and we are going to give you a takeaway as far as being able to create a budget and plan. But as you can see from here, everything from your rent, mortgage, car loans, student loans, credit cards, down to what you pay for your utilities, how much you save, what your medical expenses are, gifts that you may give, contributions, donations you may make, down to clothes, shoes, and haircuts. And the money spent at the salon. I know that's a big expense for a lot of women, but you know what? It's something that you can build into your finances, and as long as you plan for it, you can be successful. So one of the tips that we have is to carry a small notebook or make a note on your phone to help you remember what you've spent each day, and update your tracking sheet, and then point out areas where you can reduce your spending so that you can put money to where it really needs to go, like to your debt or your savings. So really just taking a look at what you're doing instead of blindly living and giving your money away, having more control over where your money goes. And that's what this budget tracking helps you to do. And again, we're definitely going to make sure that you have this tool in order to budget plan. We can move to the next slide. All right, so one key question that a lot of people want to ask themselves is, are your expenses more than your income? So we're looking at if that's the case, or that may be the case based on the budget planning that you've been able to do in tracking your expenses. You can eliminate unnecessary expenses. Take stock of what you're spending your money on, what are some things that may be unnecessary, and eliminating those. Another way is to adjust your spending as needed. So you may be able to cut out certain things or continue certain things, but maybe do it cheaper. You might want to consume less, or you might want to buy things on sale, or you might want to wait to see when things are most cost effective for you as you shop. Or as you choose what you're going to spend on. So really key part there in taking control for yourself. And then also seeking out new sources of income. Do you have a side hustle that you do? Can you capitalize on that? Can you increase that? Can you start that? Are you able to take on a second job? Can you fit that into your life somehow, even for the short term, in order to help you build your savings for whatever your goals are? And with your current employment, is there an opportunity for you to make money? Is there an opportunity for you to get a promotion, or ask for more money, or seek out any new opportunities that would allow you to increase your income? So you want to take all of this into consideration in looking at your entire financial picture. We can move to the next slide. All right, so budget action planning. What does it look like? You want to list your sources of income, all of them, and then track your expenses. Know what comes in, know what goes out, and then at the end of the month or at the end of the pay cycle, find out if you've saved or if you've overspent. That's going to be a key part for you in understanding exactly what's going on in your finances and where you can make adjustments, some of the adjustments that we talked about in the previous slide. Evaluating your unique financial situation based on what you've tracked and seeing where you are compared to what your financial goals are. Reviewing your budget regularly. So making sure that this budget action planning that you've put into place, that you're staying on top of it, and that you're holding yourself accountable for doing what you want to do to work towards your finances. So making sure that your budget is reviewing regularly and that you're growing in that action planning. So as I mentioned before, there is a budget action planning worksheet that you will be able to take home with you physically or digitally. So we'll be sure to save that, to share that with you. Next slide. All right, so everything that we talked about here, as far as the budget planning, as far as ways to save, ways to increase your finances and looking at your immediate and long-term future, are available on tdbank.com /financial education. There you will find lots of information available to anyone, whether you're an account holder or not. You can find tips on at the Learning Center to create a budget. There's an interactive module there to support you with that. But there's a budgeting worksheet that's also available for free, where you can put in all your expenses, you can put in all of your income, and you can even plan for the future based on that worksheet. It's available on the tdbank.com site, Financial Education. And I've also shared it with leadership, the Excel sheet. So if you want that to be emailed to you or printed out, you can definitely get that from leadership, by letting them know that you're interested. We also, there's in taking care of your credit, because credit is a part of, achieving your goals that involve borrowing. Annualcreditreport.com, everyone is able to get a free credit report from each of the 3 credit bureaus every 12 months on annualcreditreport.com. And then you would just select your state and then enter your detailed information, and it'll give you a report. And again, everyone can get this for free once every 12 months. We recommend Susie Orman's website for financial advice. Susie Orman, as some of you may know, is a financial expert. She talks about everything from your personal, checking and savings to estate planning, retirement planning, wealth management. So we recommend the Susie Orman website as a good resource for your overall finances, in improving your finances. And then some books and articles. Beyond the Paycheck to Paycheck by Michael Rubin is a good book on breaking the paycheck to paycheck cycle. And then Financial Peace University by Dave Ramsey is another good book in making sure that you are at peace with your finances and you're empowered in order to make it work for you. And then finally, there is an article that we recommend, 10 tips on managing your income, stopping the living paycheck to paycheck cycle. And that's on mint.com. And that gives you some really good tips as well as far as managing your income. All right, we can move to the next slide. Okay, perfect. So as I mentioned, tdbank.com /financial education gives you more information on anything shared in this presentation. So feel free to access that site. Like I mentioned, I have shared a handout and budgeting worksheet with leadership for all attendees that would find it valuable. And I'll share my contact information as well at the end of the second workshop. So feel free to reach out to me for any questions on budget, savings, credit, as well as home lending. So that's the end of the first workshop. We'll move on to the second workshop, which is going to be small business access to capital. All right, so as soon as this, the second slide comes up, we'll start the second presentation for you on small business access to capital. And I know that there really are 2 American dreams, right? The dream of home ownership, and then the dream of owning your own business or having financial freedom to be able to do, to be able to live and have the flexibility in life that you want, and to increase your income as well. So a lot of people have that dream as well. So we wanted to include in our presentation information on access to capital for those who may be interested in starting a business or even growing their existing businesses. This will be some valuable information to share about small business access to capital. All right, so we'll move on to the next slide. All right, so the objective of this workshop is to help you understand the various options for obtaining financing for your small business. You know, it all starts with financing. It starts with a dream, and it starts with the power to believe in yourself and to make things happen. But financing is an important part of that. And so that is the objective of this workshop, to give you the tools needed to understand, you know, access to capital for your business or your dream. Next slide. All right, so be prepared. Know what you want and why you need it. So why does your business need capital, right? How much do you need? How will you pay it back? What and how will it be used for? And how will it affect your bottom line? Is it a one-time or an ongoing need? These are questions you want to ask yourself, because that's how you're going to determine your funding and what funding you will need now and what funding you're going to need on an ongoing basis in order to achieve the goals of your business. We can move to the next slide. All right, so it's important to know your options. So here are a few examples of some different business owners and what their individual needs are. So first, Carl is starting a new catering company, and his need is to cover business travel to his clients, to visit his clients. And his monthly expense in order to do that is $1,000. So what Carl would need is a business credit card, which he'll be able to use, it pay back, and it offers him the flexibility. Priya has a growing salon with new clients, and her need is to restock quarterly inventory, and that is around $10,000 as a quarterly expense. So when we're looking at inventory, and we're looking at her needing to purchase inventory, which will likely be paid for by her receivables, we're looking at a line of credit. And what that'll do is it'll gives you the ability to use funds, to access the funds, pay them back, and have them be available to you again. And so for someone like Priya with her needs, the line of credit it would be the best option for her need. The third example is Dao, who's about to take a new 5-year contract. So Dao is likely a contractor or a consultant, and his need is to hire additional staff in order to buy equipment. And so 50,000 is the one-time expense that he will need. And so with Dao, the best option for him would be a term loan or a fixed loan. That's a one-time expense that he'll pay back incrementally in equal parts over a certain amount of years, over a certain term. Natasha wants to open a second location for her business, and she's not sure if she'll need a service van or a new location to grow, because she already has one location that she's doing well with. So her need could be, if she decides for the service van, you know, that could be a term loan. If she decides to get a new location, she would be taking out a commercial real estate loan in order to purchase that new location up to $250,000. So those are the 4 examples of the small business needs that some business owners have, and some of the options that are available to them. We'll go into some additional options in the following slides. We can move to the next slide. All right, so there are several options that you have in starting and growing your business. The first is borrowing from yourself. So using your personal savings, personal credit cards, retirement savings, or loans against personal assets is a common way that business owners access startup funds or funds needed for important investment for businesses. The pros of that is, for funds that you already have, that you've already paid taxes on, you don't have to pay taxes again, which is a plus. And if it's your money, you're in control of what happens. So those are the pros. The cons are that if you have joint assets held with a partner, family member, or another individual, you'll still need to consult with them about the use of the assets for your business, right? And if you're using joint assets, do they see a role for themselves in the business as a startup as an investor or a founder? It's easy to commingle personal and business funds, and you could be putting all of your business assets at risk if the business doesn't work out. So we want to be realistic in thinking about those things as well. And there are limits on how much you can put in and for how long. When we're talking about your personal, your personal funds, your personal credit, your personal savings. So those are some important things to think about. Next slide. All right, so it's important to protect yourself by separating your business and personal finances. So consider protecting yourself by formally establishing your business before you put a large investment towards it. So here are a few reasons why you should separate your personal and business finances. One is tax benefits. Make it easier on yourself and your CPA by establishing a business and different bank accounts to ensure that you get all the benefits and all the write-offs. Track your business cash flow. Have an honest assessment of what parts of your business are making money versus losing money without commingling your personal funds. And then establish a business image. So consider making your business more reputable by having accounts, credit cards, invoices with your business name on them. So definitely an important part of your business image and your business presence. And then access services. These are especially designed for growing businesses. Access services like merchant services for credit card processing or business lending for some of the products we talked about, credit cards, lines of credit, term loans, and commercial real estate mortgages. Next slide. All right. The second option in borrowing is borrowing from family, friends, and investors. So if you choose to go this route, you want to discuss the loan, discuss if the loan will be a gift, a donation, or a loan or an investment, the funds that you're receiving. Be clear on the terms and the expectations. Put an agreement in writing if warranted, and then how and when will it be paid back? Very important to make sure that those terms are identified. Determine the roles, R-O-L-E instead of R-O-L-L-S, sorry for the typo there, and responsibilities of the lender. So, we want to make sure that everything is clearly defined. Another thing that's an option is crowdfunding. Crowdfunding is a convenient way to manage funding online. You can access and process pre-orders of a product to help raise funds. And if you don't adhere to the rules of their site, investors could take the money directly back from your checking account. So it's really important that you read the terms and conditions of each site if you're considering using crowdfunding. Next slide. All right. So borrowing from friends, family, and investors, the pros are, it's easier to convince a person who knows you to invest in your business compared to a complete stranger, right? The people who know you, who have relationships with you, they believe in you. So it's easier to get them to invest in your business. The cons is that it's a missed opportunity to build bank credit. It may cause relationship issues, depending on the relationship and the communication. Your friends and family may overstep boundaries when it comes to your agreement or your business. Politically exposed investors could cause a red flag as well, and then you may be liable to pay taxes on the funds that you raised. So be very aware of all of those when looking at family, friends, and investors as a borrowing option. Next slide. All right, so now we're going to look at conventional bank loans. So you'll need to fill out an application and provide business financials, tax returns, and provide access to your personal and business credit information. Now, the pros to doing a conventional bank loan is that they offer a range of products from small business, credit cards, business mortgages. Banks traditionally offer lower rates and fees. And then if you're bringing your checking account and loan relationship at the same time, you could receive a rate discount on your loan request. So that could be a plus as well. And then banks are easy to contact for help. You know, the hours, the convenient hours, the fact that you can walk in, the fact that there are multiple locations is a pro as far as looking at, financing. Some of the cons are, the application to closing process can take about 2 weeks or more. So depending on, how soon you need the funds, you're looking at a few weeks. You need to take time to fill out and prepare documentation. So everything needs to be verified and documentation is required. So that will need to be provided. You may need to be prepared for an interview with a bank so that they can understand more about your business plan and yourself. And then finally, if there are weaknesses in your credit history, personal and or business, this may result in a loan offer with higher rates. So those are just some of the pros and the cons of a conventional bank loan. Next slide. All right, so the next option is a Small Business Administration SBA guaranteed loans. And the US government provides banks with a partial guarantee of small business loans so that the lending institutions can more readily finance small businesses. So you'll need to fill out an application and provide specific financials as well as some SBA forms. The pros of this type of loan is that the SBA products provide options to finance projects with less money down and longer repayment terms. With many SBA programs available, you can put as little as 10% down. And for some of the programs, annual renewal fees have been waived for 7 years. So, that can be a big plus. And then the bank is your only contact. So once you go with these loans with the bank, you won't have to be speaking with both the bank and the SBA representative. The bank is your only contact. Some of the cons is that the rates and fees may be higher than a conventional bank loan. SBA loans may take longer to close as well, just because of, some of the requirements around that. Next slide. All right, so the benefits of going with an SBA preferred lender. So banks with preferred lender status have the ability to make credit decisions on behalf of the SBA. So rather than having to wait days or weeks for the government to make a decision, the turnaround time is much faster versus a bank that does not have a preferred lender status, and the bank can keep you informed on the status of your loan. Typically, the bank has a familiarity and tools to help guide you through completion of SBA loan forms as well. So really important if you go with SBA to go with a preferred lender, which will support your process in moving more smoothly. Next slide. All right, another option that we have is to go with alternative lenders. The pros of alternative lenders is that typically it's an online application that takes less than 30 minutes to complete, and you can receive the decision in as little as 2 days, with funds being deposited in as little as 2 days. If your credit is weak, you may still be able to obtain a loan, and alternative lenders do have customer support, although not in person, and they may be a little bit more difficult to reach in person. Some of the cons is with it being a mostly digital process, with everything being done mostly online, make sure you're guarding your online security. Make sure that you're vigilant as far as online security. The rate structure may be different than banks and slightly higher. And then you should be aware of more aggressive payback terms with these types of alternative lenders as well. And then your loan may be sold soon after you close. So just some things to keep in mind as far as the cons there. Next slide. All right, so the next option for funding is nonprofit community development financial institutions. So these are private, not-for-profit financial institutions that are 100% dedicated to delivering responsible, affordable lending to help disinvested people and communities join the economic mainstream. The pros of this, going with this type of institution, is that they may offer more creative or higher risk loans and may be more willing to be first in. They work with their bank partners and provide technical assistance as a part of the loan process. So those are the pros. Some con is that because these institutions obtain some of their funding from private sources, their cost of capital may be higher than borrowing from a bank. So you'll end up likely paying higher fees and interest as well. Next slide. All right, so the final borrowing options or option for funding are grants. So a grant is a contribution which can be earmarked to, with a designated purpose and conditions for use. So these funds do not need to be paid back by the business. Grants are for a great resource for small businesses in innovation, technology, and scientific research industries. Grants are a great option in looking at funding, especially for startups and for growth as well. The pros of grants is, depending on your industry, there may be little competition for the money that's available. So that's a plus. You may receive mentors and experts as a part of receiving the grant. And then receiving a grant can provide credibility. So you being approved for a grant, and being able to get it shows to your prospective clients, credibility with the establishment of your business. So that's a big plus. Some of the cons is that the application process can be long and very specific to each organization. There may be conditions to accepting grant funds, and documentation on how funds are being used may be required. So there may be documentation on how you're using the funds. Grant funding is usually dispersed once a year or once a quarter. So with grants, depending on if you qualify, there are definitely some pros and cons as well for grants. All right, next slide. All right, so credit, personal and business. So having an understanding of personal and business credit score is crucial if you want to obtain financing. So if you're a sole proprietor, your credit score is tied directly to your social security number, and as your social security number acts as your business tax ID number. That's for sole proprietors. If you're an LLC, credit scores are passed through entities and income and expenses reported on the personal tax return and tied to the owner's social security number. If you are a corporation, the lender may not rely on your personal credit score or use your social security number as tax ID. However, the financial institution will look at the principal's personal credit as a part of the loan underwriting, and often they look at a personal financial statement. So in any event, it's important. It's going to be really important that you take care of your personal as well as your business credit as well. All right, next slide. All right, so we're nearing the end of the presentation. Wanted to let everyone know that the TD Bank Small Business Resource Center is available with tons of great information for everyone, for customers, non-customers. You can access virtual workshops and more. There's video tutorials on a variety of topics, from creating competitive advantages to balance sheets to access to funding and a lot of great information. You would just go to tdbank.com/small-business and then click on Resource Center, and you can begin and get tutorials and a lot of great information on that Resource Center for everyone. So just wanted to share that with you. And then the information on the first workshop that I did on the personal budgeting and finances, the TD Bank General Learning Center, tdbank.com/financial education will give lots of information on personal finances as well. All right, so the final slide is my contact information. So please stay in touch. I am available if you have any questions about anything that we went over today. If there's anything that comes up in terms of any information I can share for your home lending needs, for your borrowing needs, I am more than happy, myself or Daniel Robinson, my co-manager, are more than happy to assist you. Like I mentioned before, I work in between Fairfax and Dumfries. So these two store locations are convenient. And my leadership has the contact information that they can share with you. So please do not hesitate to reach out to me if there's anything I can do. All right, so that's the end of the slide.
I don't know about you, but I got a lot of information from him. Does anybody, before you go, please, does anybody have any question? We have his contact information. If anybody, please make sure you put down your name, your email address, phone number. We can text or email the information to you so you can have it in case you have questions. Thank you so much, Mr. Henry. I don't think you left already. We appreciate you.
Absolutely. All right. So I just wanted to say that I hope you found this information enlightening and empowering, and I hope that you're able to apply it to your own financial lives. I am sorry that I could not be there in person this year due to limitations around COVID restrictions, but hopefully we'll be able to join next year in person. I wanted to say thank you all so much for having me. It has been a privilege for me to join in this empowering event. I love the work that you're doing. I love the ministry. I love the community spirit. And so really, really, really great work, very empowering. To Pastor Joyce, Pastor Israel, and to Brother Emmanuel, who has been wonderful in working with me with the technology this week so that I could be there virtually, and the Oasis of Breakthrough family and friends. I'm grateful for the opportunity to share with you today. And if there is anything I can do, please feel free to reach out to me or Daniel. And I wish you a successful event for the rest of today.
Thank you, Mr. Henry. You feel like family already, so you're part of us. You're welcome to visit anytime, please.
All right,
and
absolutely.
We'll send some referrals also. Thank you so much. We appreciate it.
Absolutely.
Thank you.
Have a good one.